Now, there's been a theme lately of the highlights I pull out to just try to reaffirm a point here. Once the market shows you resistance is when there's opportunity to do the opposite. Now, as I just walk through this, do you see how we broke out right in here? Is that predictable? And so you walk it back and say, if there's obvious resistance in this case, it's when you want to think opposite. There's obvious resistance because that's the VWAP that's coming in here, and the market's already had kind of a swing high and broke back down. Kind of comes in here, breaks back down, and they're having everybody else think, wow, what great resistance. And so they get loaded up to the short side because that's what people do at great resistance, right? They get short. And after they get short, what do you become? A buyer. They have to exit that short position. So the more shorts there might be in here, the more buy orders that are all being placed down in here, right? More shorts in here, more buy orders down here. I don't know about you, but one of the important things about the price of anything being able to rally is you need what? You need more buyers. If you don't have more buyers, you're not going to go up. I don't care if it's the price of a house or an iPhone or anything. You got to have more buyers. How do you get there? More shorts. And so you'll see this blow up with more shorts, but you're anticipating and you're building out the story and understanding the context of what the market's thinking, not just what you're thinking. The market thinks that that's going to be resistance because it was resistance. The market had a little bit of a failure where it had a really good chance in this circle right here to actually break. And when they came out of the hole like that, it's just that thought, wait a second, you probably got some shorts looking for a breakout stuck, which adds to the ability to break out to the upside. So when I play this, you could see our laser go from green to red. You could see the shorts piling in on our OPP, and then bam, you get the pop. And it really never looks back. This is stripping out the randomness in your predictions. The why behind the prediction. Instead of it being random, instead of it feeling like just a good guess or you're lucky, you're not going to build any kind of consistency if you feel lucky every time you made a prediction or even a trade. It has to feel like you took the hammer and you hit the nail and the nail goes down. It has to seem like the tool is working. Stripping out the randomness is, one of the parts of that clickable moment, that light bulb moment. Going back to why does price move?